What do these downward moves in both the dollar and oil mean for the broader markets, Guy?
I think, well, first thing you know, old Jed's a millionaire.
Yeah, I mean, that's great reference to that.
I mean, unbelievable. Yeah. And he's been doing it by shorting a couple things, crude oil. But more importantly, I think the dollar, and you have a pretty good memory, I think the rest of us do as well. It was August 5th that the market sold off in a meaningful way. And if you recall, the backdrop is what's going on with dollar yen, and the yen was strengthening in a meaningful way. And it all started with the CPI report in July. I only mention that because very quietly, the yen has been strengthening right before our eyes. And we might be on sort of the precipice of another types of those events, but it speaks to a weakening dollar, weakening commodities, I think a growth concern, something that Tim's been talking about, and I think the market's waking up to it.
Yeah. Lori, how do you interpret this?
So, look, another time that we saw the dollar just absolutely slide was back in the fourth quarter of 2018. And what else happened back in the fourth quarter of 2018? Companies had started to warn investors that Trump's tariffs, that the China trade war was going to have an adverse impact. We saw that absolutely happen in that September conference season. And as I think back to, the last week or so talking to investors, it's not just tariffs they're concerned about. It's all the disruption coming out of Washington and the ripple effects. And we're finally starting to see investors question whether or not those tariffs are, not just a negotiating tactic, if they're actually going to stick around. You're starting to see, glimmers of problems in the job market that investors are taking notice of. And so growth is being questioned. And I think that's, pressuring both of those right now.
I tell you, I'd say only 20% of the dollar move is tariffs and weakness. I'd say 80% of it is foreign policy. And I would link back also the weakness in oil to what's going on with the dollar. I mean, look at what happened in Germany. You have a country making a historic announcement in terms of what they're going to do in terms of raising debt and going on high growth. That rallies the euro. That rallies bond yields, obviously sells off their debt. But this is all about the euro rallying against the dollar. This is all about the Saudis siding with the U.S. and Russia and cutting out the rest of Europe, talking about Ukraine. This is about cutting an oil deal with the Saudis so OPEC decides they're going to increase production. To me, this mosaic, and it is, there are all these pieces, they are related, and Trump's impacting all these corners of the market. And I think it's not just about the economic data, which has been weaker. I think that is part of it. I think tariffs are a big concern. But what's going on in Europe and the reaction to U.S. foreign policy right now has major implications for the dollar and major implications for global bond yields.
Yeah, you guys know me as like the silver lining guy, right?
Yeah, 100%.
So what I would say about this dollar weakness is like, okay, U.S. multinationals, especially the big tech guys who have a lot of stuff overseas, maybe it's pretty good. We've seen S&P 500 earnings expectations come down over the last quarter or so. It's not something we saw a whole heck of a lot in 2024. I think we came into the year with like 13% expected year-over-year growth, and that's been ratcheted down, right, a little bit. So maybe this is the sort of thing that helps buoy, some of these mega cap tech stocks that have had a tough time year to date, that sort of thing. So again, we're almost done with the quarter, and we're going to get very focused on Q1 earnings really soon. So maybe that is something of a tailwind.